Hello, I'm Angeline Ong, and welcome to this new edition of Beat the Street, the show that gives you all the tradable news and data that you need ahead of the Wall Street Open. Coming up, US indices show signs that they are set to fall on rising yields and weaker Chinese data. And also taking a look at the US after Goldman Sachs cuts the chances of a US recession. More on that in a moment. And SoftBank's chip designer ARM aims to raise up to $4.87 billion in its US IPO. Very warm welcome to you. I'm Angeline Ong, and this is Beat the Street. Not long before Wall Street starts trading, let's take a look at how equity markets are looking as we count down to the open. It must be said that we are looking at futures indicating a lower open. Futures weighed by higher Treasury yields, which in turn have hit growth stocks, whilst the slow expansion, the rate of expansion in services activity in China is stoking worries about demand from the world's second biggest economy. The S&P 500 also, let's just take a look at that, ending slightly higher after. Let's take a look at the US tech first, because we're seeing a similar trend there. It's come off slightly since July, but is creeping back up again for the last few days. Let's take a look at the SPX, which is also one that we have been watching. And on the platform, it is known as the US 500. And this, as I mentioned earlier, has a similar trend line to the NASDAQ as well. Highs there seen in July 4597 before it started traversing lower to around mid-August, where it hit 4370. But it is coming back now, it must be said. And as more and more traders come back online and investors come back from their summer holidays, we could see more liquidity come into the market. Of course, everyone waiting on the factory and durable goods data out later in the session. Also, it must be said that global business activity has largely slowed further last month as services companies struggle in the face of weak consumption, rising prices, and also borrowing costs, which are still high, and an indebted consumer. All this playing into a weaker environment. In the Eurozone, we had numbers from Germany. Its services sector contracted for the first time this year. France's shrank more than first estimated. Asia's surveys for August also were downbeat, with China's services activity expanding at the slowest pace in 8 months. More on that in a moment. Of course, it's the Fed outlook that is what everyone's looking out for. And Keith Buchanan, portfolio manager from Globalt Investments, says that the data makes the case for the Fed becoming more dovish as we head into the fall. If the end of tightening comes sooner than later, this could all lead to a substantial rally in equities. Well, the expectation, or rather this expectation of no more Fed hikes, helping investors to remain slightly optimistic. More on this, let's cross over to IG's chief market analyst, Chris Beecham.
US cash markets return from their long weekend this afternoon. It's expected to be a fairly muted open, but there are signs maybe the futures are recovering on hopes that the Fed won't have to hike again this year. That all goes back to last week's payroll data, especially that rise in the unemployment rate. That's giving hopes maybe that equities can see a stronger end to the year as well, as traditionally strong Q4 seasonality takes over once we get September out the way. The big risk remains that rise in oil prices and resurgence in inflation. But at the moment, expectations are that we won't see another Fed rate hike this year.
Now, one thing to watch out for, as I mentioned earlier, Goldman Sachs has cut the chances of a US recession in the next 12 months to 15%. This is from 20% and comes amid continued easing inflation, it says, and robust labor market data. Also want to quantify this and add this to the landscape as well. We did have this private survey out of China, as I mentioned earlier, which showed that services activity there slowed in August, or rather the expansion slowed to a rate that was its most slow in 8 months. This is on weak demand, weak consumption, and also further evidence that the stimulus there has failed to get consumers spending. China's services activity was one that actually pushed down US-listed shares of Chinese companies, including Pinduoduo, which is PDD.O, and also Baidu. Just showing you the chart here because Baidu is all sessions, and it has actually come down since that data, down 1.3%. Also checking in on Alibaba for you, because this is another keenly watched stock, which is all sessions as well, and that is also lower. Among other stocks that we are watching as well, Airbnb and Blackstone, which I have here for you. Just showing you Airbnb first because Airbnb's shares are all sessions too, and it's looking like it's marching higher there ahead of the open. Because of the expectation that both Airbnb and Blackstone are set to join the S&P 500. Also, we're watching Oracle as one of the ones to keep an eye on because Oracle, all sessions as well, was gaining ground, and it's still up there, as you can see, up 1.7% all sessions after Barclays upgraded the software firm to overweight from equal weight. Meanwhile, in the oil sector, it looks like there's no deal in sight, or rather energy and gas as well. No deal in sight yet between Chevron and unions in Australia. Workers at Chevron's Gorgon and Wheatstone liquefied natural gas projects in Australia still planning a total strike for 2 weeks from September 14th, says a union alliance. Well, no one's saying yet that there will be an immediate impact on the market. Many traders are starting to worry about longer-term disruption. Australia is, of course, the world's biggest LNG exporter. Now, just taking a look at what the Union Alliance said on Facebook, the Offshore Alliance is escalating protected industrial action to demonstrate that our bargaining negotiations are far from, quote, intractable. And just want to update you on news just crossing not too long ago, SoftBank Group's arm aiming to raise up to $4.87 billion in the chip designer's US IPO. This is according to a regulatory filing. This coming after Apple, Nvidia, Alphabet, AMD, and other customers of ARM Holdings having agreed to invest in the chip designer's IPO, reports Reuters. SoftBank hoping that once trading ARM shares will attract other investors. Now, before we go, let's have a last look at some other instruments for you. Just taking a quick look at the volatility index. As you can see there, still quite low given the data, the mixed data that we've seen out of the US and out of Europe of late. And also checking in on the markets ahead of trading, as I mentioned, all indicating a softer open ahead of the bell. And also oil is another one to watch out for because both Brent and WTI have weakened slightly this session, but it must be said they are still near highs, year-to-date highs there, as you can see. Well, that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.